Okay. So the circular flow of income is a model that shows us what goes in, out, and around an economy. So this is going to be my economy. I'm going to draw what comes into it, what goes out of it, and what goes on inside it. So we'll start with inside. So inside the circular flow of income, we have, or inside the economy, we have workers. Well, no, we don't have workers. We have consumers and we have producers. Okay. We have consumers or people, and then we have firms. You can call them consumers or workers, let's say people. Okay. So we need to know how they interact, and then we're done with the economy. Okay.
Yeah.
So firms are going to produce goods and services. They're going to give consumers goods and services. And what are consumers going to give firms in return for that?
Money, profit.
They're going to pay for them. Yeah, money.
Yeah.
We don't have to worry about profit in macro. So firms provide goods and services which consumers pay for.
Yeah.
And how do firms produce them? They produce them by hiring workers.
Yeah.
So these consumers or workers, they provide a factor of production. They provide their labor to firms,
Yeah.
provide their service to firms. And what do firms do in return for that?
Pay them.
Pay them. So money is going that way, and money is going that way. Overall, in summary, firms give people money, and people provide services to firms. And then in return, firms provide goods and services for people, and people give money in return.
Yeah.
That's a summary, a high-level summary of everything that goes on around the economy. And it shows that income equals output. So we can say overall income equals output equals expenditure.
Yeah.
We were talking about that earlier. It's just overall an average. Yes, some people can save money, but also some people can borrow money. So overall, however much income that these workers earn is going to be roughly the same amount as how much they spend on goods and services. Okay.
Okay.
Going outside the economy now is really straightforward, but also it's going to click more when you do these things in future topics. So one example of money that can be added into this circular flow of income, these injections. The other bit is called leakages or withdrawals.
Yeah.
One example of money that can enter is government spending.
Yeah.
The leakages are always the opposite of the injection. So if the government spend money, what's the opposite? What's it called when the government take money from us?
Take taxes.
Taxes. Another example of money that can enter the economy. Imagine if we sell a good or service to somebody in another country. Is that called an export or an import?
Wait, say that again, please.
If we sell a good or service to somebody outside of this country.
That's export.
Good. And if there's an export, money comes into the country, right?
That's injection. Yeah.
Good. So export is an injection, therefore imports is the opposite, it's a leakage.
Yeah.
And lastly, the final injection is investment. And the opposite of investment is saving. So in real life, saving is a good thing. In economics, saving is a bad thing because saving doesn't mean savings like savings here means you've got money that you're not using. So this consumer, this person worked for the company, got paid, and is not buying goods and services. They're just saving all their money.
Yeah.
Therefore, money is not inside this rectangle, it's outside of it. If injections are higher than leakages, the economy grows. If leakages are higher than injections, the economy shrinks. That's about it.